In order to make a success in trading the market, the trader must have definite rules and follow them. The rules given are based upon my personal experience, and anyone who follows them will make a success. Rule number 1. Amount of capital to use. Divide your capital into 10 equal parts and never risk more than 1/10 of your capital on any one trade. Rule number 2. Use stop-loss orders. Always protect a trade when you make it with a stop-loss order. Rule number 3. Never overtrade. This would be violating your capital rules. Rule number 4. Never let a profit run into a loss. After you once have a profit, raise your stop-loss order so that you will have no loss of capital. Rule number 5. Do not buck the trend. Never buy or sell if you are not sure of the trend according to your charts and rules. Rule number 6. When in doubt, get out and don't get in when in doubt. Rule number 7. Trade only in active stocks. Keep out of slow dead ones. Rule number 8. Equal distribution of risk. Trade in 2 or 3 different stocks if possible. Avoid tying up all your capital in any one stock. Rule number 9. Never limit your orders or fix buying or selling price. Trade at the market. Rule number 10. Don't close your trades without good reason. Follow up with a stop-loss order to protect your profits. Rule number 11. Accumulate a surplus. After you have made a series of successful trades, put some money into a surplus account to be used only in emergency or times of panic. Rule number 12. Never buy or sell just to get a scalping profit. Rule number 13. Never average a loss. This is one of the worst mistakes a trader can make. Rule number 14. Never get out of the market just because you have lost patience, or get into the market because you are anxious from waiting. Rule number 15. Avoid taking small profits and big losses. Rule number 16. Never cancel a stop-loss order after you have placed it, at the time you make a trade. Rule number 17. Avoid getting in and out of the market too often. Rule number 18. Be just as willing to sell short as you are to buy. Let your object be to keep with the trend and make money. Rule number 19. Never buy just because the price is low or sell short just because the price is high. Rule number 20. Be careful about pyramiding at the wrong time. Wait until the stock is very active and has crossed resistance levels, before buying more, and until it has broken out of the zone of distribution, before selling more. Rule number 21. Select stocks that show strong uptrend to pyramid on the buying side and the ones that show a definite downtrend to sell short. Rule number 22. Never hedge. If you are long one stock and it starts to go down, do not sell another stock short to hedge it. Get out at market. Take your loss and wait for another opportunity. Rule number 23. Never change your position in the market without a good reason. When you make a trade, let it be for some good reason, or according to some definite rule. Then do not get out without a definite indication of a change in trend. Rule number 24. Avoid increasing your trade after a long period of success, or a period of profitable trades. Rule number 25. Don't guess when the market is top. Let the market prove it is top. Don't guess when the market is bottom. Let the market prove it is bottom. By following definite rules, you can do this. Rule number 26. Do not follow another man's advice, unless you know that he knows more than you do. Rule number 27. Reduce trading after first loss. Never increase. Rule number 28. Avoid getting in wrong and out wrong. Getting in right and getting out wrong. This is making double mistakes. When you decide to make a trade, be sure that you are not violating any of these rules, which are vital and important to your success.